Hi everyone, welcome to the Personal Finance Playbook. I'm your host, Jack Wang of Longhorn Financial. Today's topic's been in the news quite a bit recently. It's a topic that affects everyone and often causes confusion and costly mistakes. And speaking, of course, about taxes. There's so many aspects to this topic that cause confusion, and often people will unintentionally incur extra taxes or penalties. And while we don't always see it, taxes often represent one of the largest expenses of our finances. To share some information today and tips on the new impact of the new tax reform, today my guest is Emily Maddox of Maddox Accounting of Dracut, Massachusetts. Thanks for being on the show today, Emily.
I'm happy to be here. Thanks for having me.
All right, so let's get started. So before we get into some of the new laws and some of the new tax reform, in your experience, what are some of the areas that people filing, people's taxes where they would commonly miss deductions or other areas that they would trip up on? What are some of those common things?
So the area that people have most trouble with is deductions and credits. So when they move beyond just having a W-2 and standard deduction, your taxes get a little bit more complicated to prepare. And if you're unfamiliar with tax law, it could go both ways. You could be taking deductions you don't qualify for, or you might be leaving some on the table. So to start with a basic understanding of deductions and credits, you'll hear your tax preparer talk about above the line and below the line deductions. The line is your adjusted gross income, your AGI. So an above the line deduction reduces your income to get to that AGI level. And those are actually the better deductions, because the lower your AGI is, that affects what other deductions and credits you qualify for. Below the line are things like that go on your Schedule A, your itemized deductions. And then credits are actually even better than deductions because they reduce your tax bill dollar for dollar. And a refundable tax credit actually gives you money back even if you don't owe any taxes.
Okay, so that's one of the common questions that people have is sort of the difference between a deduction and a credit, and you explained that, and a refundable credit. I know in the past there's been talk about things like earned income credit, child care tax credit, and things like that. And I know some of that might change under the new tax reform law, but did you see a lot of people take advantage of those? Because I know in my reading, a lot of times people will miss those in particular where they otherwise would qualify for those. What's been your experience?
Yeah, fairly often people will miss the earned income credit. The people I see miss that the most are self-employed individuals. They think they don't qualify, but they may qualify for it as well. You don't necessarily have to have a W-2 to qualify for that.
Okay, so speaking of self-employed, so that's a nice segue. So these days, especially with technology and smartphones, a lot of people are now have these side gigs, right? So whether they're renting their part of their home out via Airbnb, or they're driving for a service called like Uber, or selling arts and crafts on Etsy, right? Take your pick. But there's a lot of things out there. Because now it's more prevalent, right? It's no longer W-2, earn it at a job income, if you will, right? It's outside work. What are some of the tax issues and implications now? What are some of the things that people have to watch out for?
So for an Uber driver, for example, they're an independent contractor, so they're considered self-employed. That means they'll have to fill out a Schedule C with their 1040. So they would report their gross earnings. And I believe Uber makes this easier on them by providing them a tax summary that would show their gross earnings and also the commissions and fees that Uber holds back. So they would report the gross earnings as the income and then the commissions and fees as an expense against that income. And they can also deduct other ordinary and necessary expenses for the business of driving for Uber. So they should definitely be tracking their mileage. You need to keep a log. And that's a lot easier to do these days. Like you said, technology, there are apps that you can use to track mileage. I use one myself. And that will keep track of both personal and business miles for you. They can also, Uber drivers, they usually have to have an extra rider on their car insurance for that time where they are available but don't have a passenger. And so they could deduct that extra cost for their insurance as an expense. Another thing they need to keep in mind is that income, the bottom line net income, is subject to self-employment tax. So they have to pay the full 15.3%. When you're a W-2 employee, you pay half, your employer pays the other half. If you're self-employed, you pay the whole thing. The good part about that, though, is they can deduct half of it on the front page of their 1040. That's one of those above-the-line deductions to get to their AGI.
Hey, so that's great information for Uber drivers. I know it's a very popular service, right? Uber, Lyft, things like that. What about in the case of Airbnb, where you're renting out part of your home?
So that's a little more interesting. That was one of those situations where it depends. So if you rent it out for, excuse me, no more than 14 days, then you don't have to report that income. It's considered incidental. And also if you use it for personal use, that's part of that requirement. If you are renting it for more than 14 days, well, now you have to figure out, is it rental income or is it a business income? If you're just renting out the room, that's considered just rental, and it's passive income. And the difference is that gets reported on a Schedule E, and if you have a loss, it can only offset other passive income. Now, if you're actually offering substantial services, like say you're running sort of a mini hotel, well, then you might qualify as being in the business of vacation rentals, and you would fill out a Schedule C, like the Uber driver does, and deduct, ordinary necessary expenses against that income.
Okay, and I'm sure that the line, and I won't ask you to get into it, but I'm sure the line between sort of, are you just renting it out, and are you actually running a business, so to speak, by sort of renting out your spare bedroom or something. I'm sure that line can get rather complicated. So best to talk to a tax professional to figure that out. But it's interesting, I didn't realize that. So now let's take it another step, right? So we talked about sort of W-2 employees, which is the bulk of the world, people who sort of have these side gigs. What about people who do own a small sort of bona fide business, whether they have an employee or not? What are some implications and issues there if they actually, are producing a little product, let's say?
Okay. Well, it begins with first just even how to organize. There are different entities types that they could choose, and they really should probably consult with their CPA and or their business attorney about their specific set of circumstances and the legal ramifications and tax implications of what entity they end up choosing. When you get beyond that, I've seen some employers, you have to be careful with misclassifying workers as independent contractors as opposed to employees. The IRS provides guidance on that. You can look it up on their website, but you want to be careful and make sure that if someone is actually an employee, that they're on your payroll and you're withholding taxes and paying the payroll taxes and unemployment. Because otherwise, you could be held liable for the whole amount if you misclassify them.
So it's interesting you bring that up. In your experience, because I know you've been doing this for a while, and I know we talked offset about this, but is that an area that you find that commonly trips up business owners who maybe are expanding and trying to decide sort of whether or not they should add help, in terms of an employee, right, and bring them on as a contractor versus an employee? Is that a common area where you see a lot of folks make mistakes?
It is a common area. It's tempting to want someone to just be on as a contractor, because then it saves you costs of insurance and taxes and benefits. You need to ask yourself how much control you have. That's kind of the test. Do you tell them when they have to work, how they have to do the work, or are you just asking them for a result and they control how, when, and use their own tools and all of that? That's kind of like the basic test. There's some other ones, but that would kind of help you understand, should this person really be on my payroll and considered an employee?
But depending on how they file taxes as the business, that could mean a totally separate form, right? That a corporate return as opposed to just their personal return, right? Depending on sort of how they classify and how they treat their
For
thing.
the business owner?
Right,
or,
for the business owner, right.
Yes, right.
Right, okay.
And they also would have to, so for independent contractors, they have to make sure they're issuing 1099s to them. If they pay them more than $600 in the calendar year, that's another area that, you know, sometimes trips people up. They're not sure. They don't even know that that's a requirement.
Right. So let's kind of bring it back to individuals for just a moment. Although I'm sure it happens with, you know, independent contractors and business owners. But if you look at IRS statistics in the past years, the average refund has been around $2,700 to $3,000 range. And of course, now with tax reform, you know, who knows what that's going to be going forward. We'll get into that in a minute. But the average refund's around that number, $2,500, $2,700, $3,000. In your opinion, right? This is your opinion. What do you typically suggest to clients? Because I know I'm asked often, and people say, oh, you know, I love getting that refund when I file my taxes. So don't I, right? I mean, it's a good feeling. You know, but it may not always be the best thing, right, financially. So what's your personal opinion, and how do you advise clients on that, you know, for someone who's sort of aiming for that large refund, or do you advise them to sort of go for a smaller refund? What do you typically tell them?
Yeah, this is my favorite question, and nobody ever likes my answer. I think it's the correct answer, but you want to be as close to zero as possible. In fact, you're better off owing a little bit. Nobody likes hearing that. I'm still in that same mindset too. I like seeing a refund also, even though I know better. But I mean, really, when you think about it, is there any other bill that you overpay on purpose in the hopes of getting money back a year from now? You know, that's just not something you do. So you would rather have that money either in your pocket every week to help with the budget, and then maybe you won't have to use that emergency credit card, or you can put that money aside, like you said, be earning interest. I mean, otherwise it's just sitting there and it's not doing you any good.
You know, that's a great way to look at it. I've never really, and truthfully, I've never really thought about it, is there is no other bill that people have generally where we intentionally overpay in hopes of getting it back later, right? Because
Exactly.
There's not even a guarantee, right? Other stuff can happen into your taxes that you overpay, and then your tax liability goes up, and it kind of soaks up that overpayment, and you might not actually get it back, right? Now, granted, you won't owe, but you're right though. I mean, a lot of people sort of are fearful that you don't want to end up owing. Right. And where you said that, you know, you might be better off owing a little bit. So I know, you know, sort of the IRS boogeyman out there, you know, you hear about interest and penalties and stuff. So just, you know, very sort of high level overview. So what's the deal with that, right? If you end up owing the IRS some money, right? So we're not talking a ton of money, but even if you end up owing the IRS $1, okay, at the end of the year when you file for your taxes, what's the truth around interest and penalties? How does that stuff work?
Yeah, you're not going to get hit with interest and penalties for, you know, owing a small residual amount. There are, so another issue that we didn't touch on for the self-employed people is, you know, they need to make quarterly estimated tax payments. So you estimate your tax for the year, you divide it up into the 4 quarters, and you need to make those payments because, you know, the IRS, that's their income. They rely on that money, and they can't wait for a whole year for it. So if you don't do that, then you might be hit with what's called the underpayment penalty because you didn't pay throughout the year. Like, that's not a problem for someone on a payroll because they're having it withheld from every paycheck. So that type of person, they're not going to, even if they owe, you know, a couple thousand, they're not going to be hit with interest because of that, because they had been having it withheld, you know, throughout the year.
Okay. So that's a good point. And that's good to know that if you end up owing a small amount, essentially what I hear you saying is if you're doing the right thing, so if you're doing what you're supposed to be doing, yes, it might be an issue. You might end up having to owe some interest, some penalties, but it's not that bad. It's not necessarily this big monster out there that you would necessarily need to fear.
No.
Okay, because that's, because that's kind of how people perceive the IRS, right? So right or wrong, I mean, it's kind of the way it is.
They're a little scary for some people.
Now let's talk about tax preparation in general. I mean, so, back in the day, there were software packages you could buy. There's certainly companies that offer this service. Even these days, there's an advertisement for a company out there whose primary business isn't even taxes, but they're offering free tax prep. I'm sure under certain conditions and things like that. But but this is also something that you do, right? So what's, to the average person, maybe W-2, what's sort of the value and what are some of the things to consider when you're trying to decide between, geez, do I fill it out myself? Do I use a piece of software, or do I hire someone? What are some considerations they should keep in mind?
Well, so the free services, they're typically for people who file a 1040-EZ. And, you're talking, think about a high school kid with a part-time job. And honestly, that is a good solution for them. They have a W-2 and they probably don't owe any taxes, and they're going to get all their withholdings back. So that, that honestly would probably be a good solution for them.
Right. And a 1040-EZ, I think, is after your name and address and stuff. I think it's like 4 lines, right? Or something. I mean, it's something really short.
It's, right, very short. It's your, your wages, your deduction, and your bottom line and your refund. So.
Right.
But for other people, like we talked about, they get tripped up with deductions and credits. Even if you're using software and you're answering those questions, when you're unfamiliar with tax law, it's very easy to answer incorrectly. And the software isn't going to know you're answering incorrectly. So you might be taking a credit you shouldn't be taking, or more likely, there's credits and deductions you can be taking that you're not taking. And that's where someone who does this, for their living comes in and can actually save you quite a bit of money.
Okay, so would actually know those things.
Right.
Okay. Okay, so that makes a lot of sense, and I can appreciate that. Let's talk a little bit about tax reform. So let's kind of bring it to the present, right? And I'm sure that a lot of our viewers today are curious about this because it's been in the news and it's very, very complicated. And I would have to say that one of the original goals, I think, as I read in the news of tax reform, was to simplify the code. I don't really think that happened. In fact, if anything, I think it got a little bit more complicated. So let's kind of take it in stages again, like we did before, right? So with regard to tax reform, what are some of the things for regular sort of W-2, 9-to-5 job people? What are some of the things that impact them and things that they need to keep in mind now, 2018 going forward?
So the biggest change I think individuals are going to notice is the increase in the standard deduction. It's basically doubled. And the personal exemption has been repealed. So the statistics up till now has been about 30% of tax returns filed itemized deductions, and the rest take the standard deduction. So I think we'll probably see that number go even lower. People who itemized before and only got, maybe 18,000, married filing joint, 18,000 in itemized deductions. Well, now the standard deduction is going to be 24,000. So they're getting a bigger deduction, and it's a much simpler return to prepare. They no longer have to track, all those expenses, the charitable donations, the mortgage interest, and the state and local taxes. I mean, there's all stuff they don't have to worry about anymore because it's all in the standard deduction. So that's probably the biggest thing for individuals. The other nice thing that they've done is expanded the child tax credit. So a lot of people right now don't end up qualifying for that because the threshold's pretty low, even for married filing joint. And so they're increasing the credit from $1,000 to $2,000 per child. And they're increasing the threshold. I think for married filing joint is like $400,000. So a lot of people are going to qualify for that now.
Okay.
And when you think about it, I mean, that's kind of when you want more money in your pocket, is when you're raising kids. It's expensive.
Right. We know this. We can attest to that, right?
Exactly. So, I think all in all it has a lot of positives, and I think people will see their refund get bigger.
Okay.
And that will make them happy.
Okay, so that's good. So because I know tax rates themselves are going down,
Tax
right,
rates are going
among
down.
other
Yep.
things, and some of the bigger deductions. So let's sort of take it up a notch, and for the people who are self-employed, who do the Uber, who do the Airbnb, who do these sort of other side gig type of work, right? It's going to have an impact on them. So what are some of the major areas or biggest impacts that they're going to see going forward?
So the biggest thing for small business owners is just the reduction in the tax rate is pretty significant. It's for C corporations, it's down to 21%. Now for most small businesses are organized in some way that the income, we call it pass-through. It passes through to them and shows up on their 1040. Now even though, and that's subject to their personal tax rates. But so what they've done to try to make up for, make it fair, is they've given a 20% deduction on their qualified business income. And that's a little bit complicated. You know, we don't probably want to get into it too much. There's some limits and, you know, things that come into play there. But a lot of people should be able to take the 20% deduction off their qualified business income and reduce their net income even further.
Okay, so that like you said, that sort of in essence gives them a lower tax rate on the business income without
Right.
really lowering the tax rate.
Exactly.
Okay, all right. So that's interesting because I know that even for myself, that's a major question. Now, what about for business owners then? I know you kind of partially answered this with the lower tax rate, but the people who have bona fide businesses and an employee or two, right? What would be some, or what are some provisions where they would see the biggest impact?
Well, another interesting thing I noticed is for the companies, when you have a net operating loss, you used to be able to carry it back 2 years, and they've repealed that. So they're not going to be able to do that anymore. And going forward, they can carry it forward indefinitely, but they're keeping it to 80% of your taxable income. So they're making sure every year a business is going to pay some sort of tax. I thought that was interesting.
Interesting. Okay, I hadn't seen that, so that's interesting. But that's why you're the tax expert, right? And not me. So now let's kind of stay on business owners for a little bit, and also self-employed. So I know your firm does more than taxes. You also do some bookkeeping, which is, I think, you know, unless you are really good at this type of thing or you're really into this type of thing, is probably most people view it as a chore. I mean, this is akin to regular people sort of sitting down and bouncing the checkbook, which really, A, no one really does today, and B, no one ever wants to do it anyway, right, in a large part.
True.
At what point, sort of, whether someone's self-employed, right, that Uber driver, the Airbnb thing, or like a bona fide business, at what point would people start to consider like, hey, I really need some help keeping track of this because, you know, it's taking away from doing my whatever business I'm doing, right? What are some of those considerations, or where would people sort of cross that line?
Yeah, that's one of those questions that the answer is it depends. Depends on the individual, you know, in my case, individual client. Some clients do have a good basic working knowledge of accounting and can do a pretty good job of keeping their own books. Other people have no accounting knowledge and really right from the gate should have somebody to do it for them. If you try to do it yourself and you don't know what you're doing, you're going to end up spending a lot of money having your accountant fix it, either at the end of the year or, you know, whenever throughout the year you have them do that. So I would suggest that a bare minimum, you should have your CPA looking over your books like on a monthly or quarterly basis and just make sure that things are being recorded correctly and that the, you know, financial statements are accurate, because that's what tells you how your business is doing. And if your financial statements aren't accurate, then you have no idea how your business is doing. So that's what I would suggest at a minimum.
Okay, and that's a great tip. And so, because I would imagine that probably the worst thing for a tax person such as yourself is that proverbial story about, you know, the client shows up with a shoebox full of receipts, right?
We still have those.
Here you go, Emily. figure it all out, and I'll see you when you're done.
Yeah.
Right. But that obviously makes your job a lot more difficult, and because it takes time, that ends up costing the client a lot more money, right?
Right. It'll cost the client a lot more money to have us go through their shoebox and organize and record everything, and also that means they've been kind of operating all year without really keeping an eye on how their business is doing. They've just kind of been working. So, you know, having your CPA do it for you is nice because they're going to keep an eye on it for you, and they're going to give you feedback. They're going to give you suggestions for improvement. They'll keep an eye on your, you know, income situation and offer suggestions for, you know, how to offset tax, save on taxes at the end of the year. You know, that's all stuff that you can get by having your CPA do it for you.
Okay, and you know, I want to just jump back one quick thing, very quickly. I know for individuals, right, so W-2 employees who would obviously not necessarily need a bookkeeper, but, you know, they have taxes withheld from their paycheck regularly. Should they review that during the year for possibly adjusting withholding, maybe adjusting, you know?
They should,
you know,
especially, yes, I'm sorry, I interrupted
you.
No,
but especially in light of the tax reform, I mean, should people be looking at that?
This year, definitely, people should look at their W-4. The IRS, I don't think it's out yet, but they're going to be releasing a new calculator based on the new tax law, and you should definitely use it and see if you should update your withholdings. We see this a lot with people. They had a change in their income during the year. We didn't know about it, and they come in and they have a big tax bill, and they are upset. Don't understand why. I was having taxes withheld from my check all year long. Why do I owe this much in taxes? It's because you had more income, and we needed to adjust your withholdings, and we didn't. So it's definitely something people should monitor throughout the year, and you know, your CPA can help you do that.
Okay, excellent. We only have about a minute left, so last question here. So what is something that people should know about either taxes or tax preparation that people don't often either know or don't often find on the internet? How would you answer that?
So we were talking a little bit earlier about the IRS and being scary, and I do find that a lot of people think that they get a notice in the mail and they call up scared to death thinking that the IRS is down the street ready to throw them in the, you know, wagon and take them off to jail. And it's just not the case. You know, the IRS is very reasonable to work with. In most cases, it's just a misunderstanding that can be cleared up with a letter. Maybe you do owe a little bit of tax, maybe you took a deduction you shouldn't have, but it's not, for the average person, it's not the end of the world to get a letter from the IRS. Just contact your CPA and they can help walk you through it.
Excellent, excellent. And thanks so much, everyone, for tuning in today for this episode of the Personal Finance Playbook. I hope what you found today was very informative, especially in light of the new tax law changes, and hopefully that you're able to take some of this information and apply to you so that you don't end up having to owe the IRS. Or, as my special guest says, maybe owe them a little bit. Maybe that'd be the best way to go. Many thanks to my guest today, Emily Maddox of Maddox Accounting out of Drake, Massachusetts. And thank you so much, viewers, for tuning in today. Stay tuned next time when we tackle another topic from the Personal Finance Playbook.